We've got some news on the Fed taper timeline as well this morning. Our senior economics reporter Steve Leisman has that for us. Morning, Steve.
Good morning, Carl. The Federal Reserve's Open Market Committee looks to be coalescing around a plan to announce it will taper its asset purchases in September and begin reducing them actually a month or so after. Interviews with officials, along with their public comments, show growing support for a faster taper timeline than the market had expected just a month ago. Those changing views follow strong jobs data the past couple of months, along with higher inflation readings, especially that producer price index. So a new potential timeline or taper timeline could look like this: a taper announcement in September. Last month, market consensus had been centered around November or even December, the taper beginning in October or November. Again, that actual market consensus had been a couple months later. All this depends on how much advance notice the Fed wants to give markets. And a tapering that lasts 8 to 10 months. I'm hearing a lot of folks say 8 months, depending upon how aggressive the Fed wants to be in reducing those $120 billion in asset purchases each month. To be sure, no decision has been made yet. The committee could delay the start or the announcement until November, especially if August jobs data proves to be weak, the Delta variant sparks a new round of economic lockdowns, or inflation readings ease off precipitously. But Fed Chair Jay Powell, he said recently that he did not foresee a large economic impact from Delta, that the Fed, quote, should take seriously the risk of higher inflation. Powell has yet to speak since all that data came out, the July jobs report beating expectations and the producer price index coming in at double the street consensus. Focus now turns to Powell's Jackson Hole speech and other Fed speak there, where Powell could indeed set the table for that September announcement. We have at 4:30 p.m. We'll be asking these questions and talking to Boston Fed President Eric Rosengren, the first on CNBC interview. Carl?
Steve, you've done such great reporting on this, and you've spoken with so many Fed officials here. How narrow of a gap would you say there is between the hawks and the doves right now?
You know, it's a matter of months, and I think it's something that Powell, who has proven to be very good at bringing consensus to the committee, can pull together pretty easily. He's got a bunch of levers to use here. For example, he could announce in September and then delay the beginning until November. Also can do, if he wants to satisfy the doves, a 10-month taper timeline, or if he wants to satisfy the hawks, an 8-month taper timeline. So he's got some ways to create consensus. I think everybody is on the same page here in terms of the need to end the end the asset purchases, with some disagreement as to when. But, you know, we always find this kind of disagreement among the Fed initially at turning points in policy, and this is no exception.
Steve, people are still scratching their head about the Michigan confidence numbers on Friday, the fifth biggest month-on-month collapse. You got to go back to Katrina, the Gulf War, the great financial crisis to see a drop like that. Does it leave you wondering why the numbers portray a consumer that is so worried?
Well, not if you were following, if you will, Carl, the All-America survey, which several weeks earlier we reported that big drop. And what we saw, and I think what Richard Curtin over at Michigan is seeing, is inflation beginning to weigh on consumer sentiment. I think it's a very big deal. I think the Fed has sensed this. I think it felt a little political pressure on this issue. It doesn't help to have wages going up if inflation is going up more, and that's going to sap the optimism out of consumers. And I think what I see happening at the Federal Reserve is more and continuing concern about inflation and an understanding that it has to address that through its policy.